No one in our space can flatly say don't worry too much, because we should learn and we should think about it. But there's nothing wrong with buying one ETF and then switching to another. Or there's nothing wrong with having two that have slightly different, because it's overall diversification is the point. And as long as you're not concentrating too much so you end up with no diversification, that would be the only really big trigger point, right?
Hello and welcome to the Get Rich Slow Club. I'm Tash and I'm here with Nick, who is the co-founder or one of the co-founders of Pearler.
Hey Tash, thanks for having me.
Welcome. Today we're going to talk about a really exciting milestone. You've just hit $2.5 billion invested, which is pretty crazy.
Yeah, it's still a number I probably don't understand actually, but it's big. We know that.
We were trying to find examples to prove just how big it is, and it's quite hard. But I have around $300,000 invested, and that's only 0.012% of $2.5 billion.
Yeah, well, thank you for being invested in.
And not even 1%.
Yeah. It's been a while though. When did you make your first investment?
On Pearler, 4 years ago.
Yeah.
Yeah.
So 2.5, and you were one of our very first customers, I think.
Yeah.
So 4 years, $2.5 billion. That's pretty cool.
It's massive.
Yeah.
Exciting. Before we dive into exactly what people are investing in and more about that, what's your money win of the week?
Money win of the week, I think as a household, I don't know the actual dollars, but I do know that my partner, my wife, Kate, saw some fruit roll-up-y things that the kids love, and they were on sale, and she brought home such a quantity that even the children were kind of a bit like, oh, Mum, what's going on with the fruit roll-ups?
How many is too many?
I'm talking maybe it was a whole Woolies shopping bag full of boxes, maybe even two, something like that. But that's the household one. That one's like more of a emotional victory. My money win is probably half price connoisseur at IGA.
Perfect, all the food ones.
Yeah, I bought 2 cartons though, so it doesn't really count.
Yeah. Why doesn't it really count?
Well, it ends up being the same.
Are you going to eat them?
Nominal dollars.
Twice as fast?
Probably.
Yeah, okay.
Yeah.
Fair.
Yeah.
A more exciting question, not that isn't very exciting, is more around how young Australians are actually investing for the future. You've got so many different fun stats, but I thought we would run through what the top 10 investments actually are on Pearler first.
Yeah, great.
Should we start at number 10?
Yeah, let's do it. I think before we do though, it might be worth pointing out that for those who don't know, we don't tell people what to invest in. Right, as a platform, you can invest in whatever you want, really. And something that we're really proud of is the fact that people have chosen to put about 87% of their money into ETFs, which we think is just like something to be proud of for everyone, actually, as a generation.
What's the other 13% in?
That's spread across like Aussie stocks, obviously, and then US stocks. But it's pretty cool. I mean, I think that's what an idea of a modern portfolio should look like. Most of your money is ticking away, but you've got to find ways to make it work for you. And if that means buying a stock or two of a company you like, then, cool.
Yeah, I love it. It's very different to other platforms. Do you know roughly the percentages on any of the other popular platforms? It'd be a lot more single stocks, I imagine.
I don't know, because I don't think they put it out there as cleanly, because what you get from us generally is that's everything. Right. And I have seen a bunch of apps put stuff out there, but it's always asterisked these are the top 10 ETFs invested in by the 26 to 35-year-olds or whatever. Whereas for us, it's everything. So I don't know. Yeah,
I love your About page. It's very transparent about exactly who invests on Pearler and all of the data. And I love the gender split as well.
Yeah. And so, I mean, that's all driven by our internal stats, obviously anonymized, but we don't sit there every week updating that, right? It's a feed. So I don't know. I mean, the best thing to do is people go and check it out. But what about the gender stats that you do like?
There's more women investing than men on Pearler, which is cool, which is not the normal split.
No. So I think from memory, it's 51 to 40.
Yeah, 51.4 to 48.6.
Yeah. So yes, there's more women but I think what we continue to be really proud of is that when we first started and we only had 100 investors, then 1,000, it was something we looked at and we were like, okay, cool. But I think it's really cool that, now we're reaching 100,000 and $2.5 billion and it's still the same. So we've grown and one of the things that someone might have thought was you'll just revert to the normal, which is probably more like 60-40 or 70-30, and we haven't. So it feels good. Something we're doing it together with you as well is working.
Yay. Why do you choose to share the data when other people don't? Is it easier to not be transparent?
I mean, we chose to share it before we even had data, right? So we did surveys and we would share that with our community. So it's something we've always done. So it's a bit different for us because if it's something you've always done, you don't even really think about it. It just is who you are. And then because we started sharing it initially and because we attracted investors that thought like us, that were just unashamedly like, I invest in ETFs, it got more of those people. So I guess if I had to guess, the reason others don't share it is because they don't have such a similar group of people using their product, which is not a bad thing. But how do you share data when, one customer might be investing in some small AI company that no one's ever heard of and another one's investing in bubblegum or who knows, right?
Yeah. So we all have a similar investing philosophy, usually on Pearler.
Yeah, and that, again, it all comes back to that's one of the proudest things, I think, in terms of coming this far and seeing that we didn't start out with a mission and then find that we ended up the same as everyone else.
I guess it really shows in your top 10 investments, definitely. Like these aren't even, they're the top 10 ETFs or just the top 10 investments that we're about to go through?
Top 10 investments.
Yeah, and they're all ETFs, which is great.
Yeah. So I think in the top 20, if we dig a little bit deeper, you'll find probably a lick. So which is pretty close to an ETF, and then maybe one or two stocks. So that in itself is pretty cool.
Yeah, definitely. Let's go through the top 10.
Yeah, let's do it.
Do you want to start with number 10?
Well, I don't know them off the top of my head, so why don't you start with number 10?
I'll read them out and you can tell us the fun facts. Okay, so number 10 is VEU, the Vanguard All World ex-US Shares Index ETF.
Yeah, so not surprising this is number 10. And I think when we first started Pearler and we were really trying to find our community, we did and still do a lot of work within like what's called the FIRE community. And like the original DIY portfolio, and maybe still popular for a lot of people, was VEU, VTS, VAS. And so for those of you who aren't familiar with those, they're all in the top 10. And so VEU will give you the whole world except for America. And then VTS is obviously the US stock market. And then VAS, of course, is Australia. And then if you bought those 3 ETFs, they were seen as the most cost-effective way to get the entire world. And weirdly, more cost-effective than just buying, say, VGS, which is the whole world, in one ETF. So VEU is still really popular, although at number 10, I mean, who knows whether it'll still be that popular and whether people are moving towards more kind of thematic ways to get access to, say, Asia or Europe, etc.
Is VEU domiciled in the US as well? I know VTS is, or has it changed? I remember there was something about some of them that made it more tricky tax-wise.
Yeah, so I think VTS is still one where you'd have to fill out a W8 form.
Yeah.
I don't think so for VEU, but you'd have to check me on that.
Yeah. Well, number 9, like you just said, is VTS. So that's the Vanguard US Total Market Shares ETFs. Instead of the S&P 500, you buy the whole US stock market. Yeah,
and I think if you look at you can always go and compare these ETFs on our platform and in various others, and I think you'll find that even though VTS versus IVV or S&P 500 that you mentioned are quite different, with thousands of companies in one and 500 for another, the performance has been pretty similar.
Yeah, and it's very heavily weighted towards the top 500 anyway. You have such a low exposure to the rest of the companies.
Yeah, and so I think that's probably one key message here. It's like there's the total US market, there's S&P 500, which is in the top 10, there's VGS, which is in the top 10, and you'll find that the top companies in all of those will end up being pretty similar, and the returns therefore are pretty similar.
Yeah, they're all the big tech American companies. Yeah.
So it's easy to see why people get a bit confused, or they sit there for a while going, oh, which one should I choose?
Yeah, because they're all very similar, especially I see that with like the A200 ETFs when they're all very similar.
Yeah. Okay, so we got VEU, then VTS. So that's kind of almost the whole world in those 2 ETFs.
Yeah, already.
Yeah.
And then number 8, we've got ETHI, so ETHI. It's the BetaShares Global Sustainability Leaders ETF. Again, very similar to the ones we've just mentioned with their top companies. Yeah,
and I think that's something that people often ask, like how to go about investing, with an ethical filter. ESG is environment, social, and governance rating. So you should look at that because it doesn't necessarily just mean ethical. People always sometimes, come up to us and say, oh, I was surprised to find such and such company in one of them. But as you point out, ETHI's probably going to be not too dissimilar to some of the global ETFs and even the combo of VTS, VEU, and you'd hope that it excludes some really bad ones, but you should check.
Yes, the top ones of ETHI I always find a bit interesting, but it's NVIDIA, MasterCard, Home Depot, Visa, Apple, Toyota, Booking Holdings, I don't know what that is, Salesforce. So lots of tech things.
Yeah, and from memory, one of the things about ETHI is that they do a screen across multiple criteria for companies. And one of them, I think, is how highly rated is a place to work. And so that's a good example.
Yeah.
Things like that are what are factored into these sort of ratings, which can tell you a lot. But then as a skeptical person in general, I look at this and I go, even these big companies that are rated highly, we've just seen over time so many scandals and things come out. And I do know that there is another ETF, not in the top 10, I think, that makes quite a big deal in its marketing around how they use that scandal kind of rating as part of their filter as well.
Interesting. Do you know which one?
I think it's ESGI. Now, you'd have to check me. I think both of them will have ways that they factor that in, but I remember reading something about it more specifically for that one. But again, we shouldn't get too bogged down in the sense that they're all going to give similar-ish results. They're designed to be easy to understand products, so...
Yeah. And it can get really, like you're saying, ethical really depends on what you believe in terms of ethics. And they all have different screens and different things they include or exclude. And you can go down such a rabbit hole with this.
Yeah. And ethical isn't even the E in ESG.
No.
So we should remember that first and foremost.
Yes. We've been scammed a little bit with that.
Yeah, we have. Well, I think we're all guilty of it, right?
Yeah. I definitely refer to it as ethical when I'm pretty
sure even when we first started Perla, we probably had typos where we had ethical instead of the environment. So like you're not alone. No one's, for anyone out there listening who feels like they've ever said something wrong, it's complicated.
I feel like you've got an ethical company that you own.
We try to be, yeah.
Invest ethically as well?
Me?
Yeah.
Oh, I like to think so. I mean, I'm not going to hold myself out there that I am impact investing or doing anything particular on that front. And I'll be transparent. My super is in VU, IVV, and NDQ. So they aren't specifically ESG rated ETFs, but that's a choice of mine, which is largely driven by being simple and low fee. When it comes to Perla, I think that's a very different thing. I mean, we're a small independent company of 15 or so people, and we try and be a good place to work, and we try and be good to each other, and we try and pay people effectively and have transparency around that. And I think we do a good job.
I just think you're an ethical business as Perla.
Well, we've worked with you for a long time. Have we been ethical with you?
Yeah, you've definitely been ethical with me. Yeah. And I cut people out pretty quickly when they're not. So it's a good benchmark. But when people talk about ethical ETFs, why don't you pick one, I guess, if you are focused on kind of being an ethical company? Yeah.
Yeah, no, I mean, I think for me, it comes down to, look, it's something that I'll give you my view and why I do it, but I don't want to be seen to be, recommending one way or the other, right? So I guess my skeptical view is that the ESG rated ETFs haven't done enough to prove to me that the way that they screen out companies is actually providing any benefit to the world or to the market other than the fees are 15 or 30 times more than the ones that don't. So, I've got to think of my family and my future, and, the difference between a 0.03% management fee and a 0.5% management fee is a lot in 30 years, right? So my view is I have a view, I pick based on some numbers and what that means for me and my family, but I also just don't want to be paying for something I don't believe is necessarily cracked it yet.
Yes. Okay. So it needs to be better first.
Yeah.
Yeah.
Yeah. So if someone could show me that there is a product out there that has found a new way to be more dynamic, and maybe AI will do this, right? Maybe there's some way that they can start screening for all the mentions on social media about how customer service has been horrible to people and all sorts of, who knows?
That would be great,
right?
Yeah.
Who knows?
Every time there's a data leak,
but until that, right, I just have to go, I don't know if the products are quite ready yet. So yeah, that's my view on how I would spend my money, because I view buying an ETF in a way as spending my money on management fees. But I think, I do a lot of other things through my work and through my family that I would say, for me personally, give me enough confidence that overall in the world I'm doing good, whether that's philanthropy or what we do at work and how we donate our time. I think though that ESG rated products are a fantastic tool for people who want to go and do the research. And I would just stress that you really need to get stuck into them and understand what companies are in them, and if you feel that actually aligns to what you want to do. And if not, something I don't have the time for, you could actually go and create your own mini index really if you wanted. It's a lot of work and there'll be more transaction fees. But
what do you mean by that? You mean to buy lots of different individual companies yourself?
Yeah. Like if you really break it down and you go, this ETF, the top 10 companies are still going to be 70, 80% of it, right?
Yep.
There is nothing stopping someone who really wants to be hands-on, and I'm sure there are people out there who do this, from going and having 10% in 10 companies that are big, what people would call blue chip companies, right? That you believe are on the right side of history, right? Now, you're less diversified in a way, but at the same time, those 10 largest companies are going to be 50% of it, a lot of, like it's all degrees, right? That could be a way to do both. That could be a way to invest in a way that aligns to your preferences, but there are trade-offs and you just have to make that choice.
Yeah, you've only got so much time and energy to spend on different things.
Yeah, and then, if you look at what's happening at the moment, weirdly, I don't even know how I know this, but I was looking at the top 20 actually, and there was one ticker in there I didn't know. This is US stocks. It was NVO, so Novo Nordisk, the Ozempic, right?
Oh, yes.
And it was down 20%. I saw that in the news at some headline. I was like, wow, what is that? What is that stock in the top 20? Now, let's just say that was part of your view on ethical, i.e., it's not everyone's view, but like they're helping with health, whatever. It's clearly a popular stock. Down 20 or something percent recently, maybe even more over the last 3 months. If that was 10% of your portfolio in your kind of, I'm going to do my own index approach, you wouldn't be feeling very good right now. Now, you might be totally fine with that and you're going to ride it out for the long term. But then it comes back to, well, that's why ETFs are such a good tool.
We've come full circle.
Yeah.
The other question I had about your portfolio is a lot of people are really stuck on overlap. And it seems like a lot of your ETFs do invest in the same top companies.
Yeah.
What do you think about that?
Well, to go back to that, what I have is IVV and NDQ, and there will be a lot of overlap. IVV is my core kind of holding, right? So maybe I put 50 odd % into that. And then I had VEU, which is the rest of the world, at maybe 25, and then NDQ the balance. And so for me, someone might say, well, there's overlap. Why would you bother? I was like, well, NDQ does give exposure to a slightly smaller subset. And so the way I make sense of it in my head is like I have a US bias, but then within that, I am, probably more leveraged into tech and new technologies. And I'm fine with that. I didn't want to have just NDQ. I wouldn't do that. And I didn't feel like necessarily having IVV was taking on enough risk for the future. And, there was a moment when I considered not having VEU. This is a couple of months ago when I moved my super across. And I sort of sat there and I was like, I know like the risk-taking part of me is like, just go for it. Just go full US.
Full US, yeah.
And I was like, what? But then the sensible part of me is like, what is going to be happening in 10 years or 20 years? Right. And the last 3 months have been wild, obviously, in the world and in stock markets. And all of those were down for a long while. The first one to come back up was VEU. And then they're all up now. And so over time, obviously, if history repeats itself, they'll all grow. But yeah, that's my little journey in my own brain around like, what should I do? What's the sensible thing?
Yeah, I like it. It's a little bit different to how other people seem to think about it because a lot of people are very concerned about not having any overlap. But I do see there's times like that where it is beneficial.
Well, they're just tools. And like, I think overlap is more like, you got to be clear. Are you talking about creating too much personal admin, or are you talking about having a lack of diversification? And everyone's going to have different triggers, right? I have 3 ETFs, so my admin's not a problem. And for me, I was just sort of playing with segments like, is it tech? Is it food? Is it consumer? Whatever, right? And I think that works for me. We try, at Perla and what we do with you, we often talk about overlap. And I think we often talk about educating people on overlap as don't let overlap stop you from learning.
Mm-hmm. Don't worry too much.
Yeah.
That's something to be aware of.
No one in our space just can flatly say don't worry too much because we should learn and we should think about it. But there's nothing wrong with buying one ETF and then switching to another. Or there's nothing wrong with having 2 that have slightly different because it's overall diversification is the point. And as long as you're not concentrating too much so you end up with no diversification, that would be the only really big trigger point, right?
Yeah. I bought lots of different things as I was learning, and then I ended up moving to number 7 on the list, actually, which kind of stopped me from having to think about this too much. So I ended up buying DHHF. So that's the number 7 one. It's a BetaShares all growth one, because I do find people can get a little bit stuck on, do I buy this one or that one? Have I got too much overlap here or not enough diversification there? So that's been a really good one for me.
Yeah, nice segue into number 7.
Yes,
we talked for a while there between number 8 and number 7. Yeah, so I think too, I don't know if you would have sold out of old ones, right?
No, I didn't.
Yeah, so I think that's the thing. Like, you read stuff in the media about young people having overlapping ETFs, and a lot of the time it's just how life works. I would be thinking about what my next investment is rather than,
do I sell everything?
Yeah, and does my portfolio look a bit ugly? Because it's yours. You don't need to show it to anyone. Yeah. And if it's got some learnings in there, as long as the fees are reasonable, and you still think that those things are fine to hold, you've got to be very careful about selling out and then having to pay tax.
What's a reasonable fee?
Well, it will depend on how complicated the index is, right? But if you are in the most broad-based, simple ones, they're all under 10 bips, under 0.1%, right? That's for a very simple, we're talking Aussie index, US index, etc. VEU's in there as well, I'm pretty sure. And then I think there's like that nice warm area of like something under 20 bips.
Yeah, okay.
Seems to be, for most people, you could probably create a basic portfolio for under that 20 bips. And then if you want something more specific, you're going to go higher, but that's up to you, and you've just got to make sure that's worth it.
Number 6, A200, the BetaShares Australia 200 ETF. Number 5, NDQ. We've spoken about that a little bit already. Number 4, VDHG, the Vanguard Diversified High Growth ETF. Has this dropped down recently? I thought this used to be higher.
Yeah. So you mentioned DHHF, and people are often asking us about comparing the two and which one's better and blah, 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 like all the same stuff, and we all go through it, right? They're still very similar. VDHG, when we started this conversation, we were talking about the ultimate fire portfolio, VU, VTS, VAS. VDHG was the comparison to that. It's like, do you DIY or do you do VDHG? I'm pretty sure VDHG has been number 2 for most of the time. I think VAS has always been number 1. VDHG has been number 2 for probably 2 or 3 out of the 4 years we've been going as a company. And then in the last year or so, it's definitely started dropping back. IVV's overtaken it. And what's the other one?
VGS is number 3.
Yeah, there you go. So you can probably assume that more people are going, I want to have a little bit more autonomy.
Yeah, or their DHHF has gotten popular. So now people
That's definitely part of it
VDHG,
too. Yeah, so maybe people they've sat VDHG in their portfolio, but their next investment that we talked about before, like worry about the next investment, maybe they've gone, I'm going to go to DHHF.
I think you've just ruined the surprise for the next 2. We've got VGS, number 3, number 2 is IVV, and number 1 is still VAS.
Well, that's the surprise. It's not really,
surprise, no, it's the same always.
No, I think it has been for 4 years, which is interesting to me because, I think because we focus so much on technology and what's happening in the world, and obviously, probably for good reason, people in Australia still want to own a bit of what's happening here and dividends in our currency and all that sort of stuff. So I think it'll probably always be that way.
Do you think people get confused and buy VAS on the ASX and then buy their US ETFs on the US market instead?
Oh, on the whole, I don't think so, no. But if we have a look at the US stocks, yeah, you will find, interestingly, the top one, and this hasn't always been the case, should I say the top one, or are we going to count down?
No, you can say the top one.
Go the opposite way with the US stuff. But so VOO is the top held US asset amongst Perla investors, and Perla investors put, maybe 10% of their money in the US, right?
And VOO is another just S&P 500 ETF.
Correct. So IVV, which we mentioned, which is number 3, has been very popular, and it's probably the most popular way that Aussies on the ASX get their US exposure. Why do you think VOO is so popular?
I think as we hear lots of US influencers talk about it, like a lot of the US people will say just buy VOO and that's it and you're good to go. So I think we hear that and we go and buy it.
Yeah. See, maybe my algo is not trained like yours. I don't actually see that a lot.
Oh.
I do though. Over time, I've obviously been marked as a Warren Buffett fan, and so I get a lot of Warren Buffett content.
Are you a Warren Buffett fan?
I think he's been formative to what Pearl has become, only in the sense of he kind of says, do what I say, not what I do. But if anyone who's watched, we post his stuff all the time, but he's like classic, buy the S&P 500 in a low-cost fund, etc. And then he'll often go on and say, I would pick an ETF provider that I could trust and that I knew would be around in 50 years' time. And he then lists out Vanguard as being a good example of that. So, yeah, probably joining the dots. It starts somewhere with Warren Buffett and then US creators repeating that.
Yeah.
That's probably why.
Yeah, and we look for things that we recognize or are familiar with. So,
would you buy it?
No. Because I can buy the same thing on the ASX and it's easier.
Why is it easier?
Because you don't have to do the tax forms.
Yeah.
The
I think
W8
another
then.
thing is you don't have to pay FX.
Yes.
So there are other reasons that people might want to buy VOO. So it's clearly popular and people have their reasons. And I'm assuming that they're factoring in the FX in moving your Aussie dollars into the US. So it's not a huge expense, but it's an expense and we should all be cognizant, I guess.
Yeah, and it adds up. The rest of the top ones are all single stocks. So NVIDIA, Tesla, Apple, Amazon, Microsoft, Google, which is interesting.
Yeah. This is, again, something that we often talk about at work. It's like we've built this community and this business where, you could say it's largely young people buying ASX-listed ETFs. And from the top 10, they're largely global ETFs, right? Who are made up of the companies you just said. But then when it comes to the US, where there's maybe, I'm going to get the number wrong, I don't know how many ETFs are offered in the US, right? But there are lots. And there's an ETF for everything you could possibly imagine.
Yes, I've seen some really funny ones pop up.
There are some good ones and there are some funny ones and there are some downright bad ones. But interestingly, the Perla investor kind of ignores all that, which I'm kind of proud of too, because a lot of them are just marketing nonsense.
Yes. Yeah.
We could probably find some of the worst ones, but I feel like one that I remember was like the Trump ETF and then the anti-Trump ETF or something like that.
I haven't seen that.
I don't know whether it ever got off the ground, but the idea was it was going to invest in, it was the woke ETF.
Yes,
that was it.
I saw
Anti-woke.
that.
Yeah. And it was going to invest in companies that were, anti-woke, which I think they defined as companies that were not implementing DEI policies or something like that. I can't remember.
Crazy.
Anyway, we're on a tangent here. Anyway, it's cool because whilst we're proud that the Aussie investors at Perla are backing up the philosophy of low-cost index investing, at the same time, when they're investing in the US where there's all these creative, weird ETFs that you could maybe get sucked into, they're kind of ignoring that too.
Yeah.
And they're just going, maybe their idea is like, I want to own Amazon for the next 30 years or whatever it might be, right?
Yeah.
So, you can have two different strategies for two different markets. I think that's pretty cool.
Yeah, very cool. This has been great. Thanks for joining us.
Thanks for having me.
I'm sure we'll see you again soon.
Yep.
Yay, bye.
Thanks so much for joining us. If you found this episode helpful, please rate us 5 stars, write a review, or share with a friend. If you're new to investing, make sure to listen to our first 10 episodes. Follow us at Get Rich Slow Club or Tash at Tash Invests or me at Anna Christina.
The Get Rich Slow Club podcast is a collaboration between Tash Edgman from Tash Invest and Anna Christina from Perla. Knowledge is power, especially when it comes to investing. So make sure you check out our financial services guides and read the product disclosure statement and target market determination for any investments you're considering. See our show notes for more info. Any advice is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you. This show was brought to you by Natasha Etchman, who is an authorized representative 1299881 of Guideway Financial Services, AFSL 420367, and Perla, who is an authorized representative 1281540 of Sanlam Private Wealth, AFSL 337927. The Get Rich Slow Club acknowledges the traditional custodians of the land we record on. From coast to coast, across land, waters, and communities, we pay our respects to elders past, present, and emerging.